What is going on, guys? Today we're going to talk about Alibaba's earnings. And I know I'm a little bit behind. I apologize for that. It was going into Memorial Day weekend. They reported on the 26th. So I wanted to pre-record some videos and now I'm finally catching up with it. So I want to make this video and basically go over their earnings, go over my opinion on it. I personally do own Alibaba shares. So I'm obviously invested in how well the company does. And so far, yeah, we're just going to get into it and go over the company, go over where it's at currently, go over the price, go over price targets for the future. We're going to touch on everything in this video. So if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So real quick, we're going to just take a look at their chart. Over the last month, they're down almost 8%, which is quite a lot. But their earnings, like I said, they reported on the 25th, 26th. So what we see in there is they were down all the way at $82, and they spiked up to around 94 to kind of sitting in the 90s and have leveled off since then. I mean, there hasn't been a whole lot of good news. The market kind of overall did react positively around the same time, and then they've kind of just traded sideways, which Chinese stocks, I kind of expect when the market does eventually recover, I kind of expect Chinese stocks to be one of the last ones to recover in there, just because there's a lot of better deals, what people are going to think are better deals in the market. But in my opinion, Chinese stocks are a great deal in their own. It's just, I think a lot of people with the China concern and other things, it's going to get the last rotation of money is going to be into Chinese stocks. So I kind of expect other things to recover before we start seeing Alibaba recover. But again, let's just take a quick look at the last kind of year for Alibaba stock. So it's been rough. They're down almost 60% from highs of around, I think they almost got up to 300. Yep, just over 300 back in October of 2020. So here's something insane that I hadn't seen. I thought their forward PE was higher than this, but it's crazy to me that Alibaba here now is sitting at a 9.86 forward PE. Their trailing PE is rough. But going forward, obviously they're expecting China to reopen and have better earnings, and it's sitting at a 9.86, which is really crazy, especially for a company that's very comparable to a Amazon that's sitting at a 50 PE ratio. Obviously Amazon's had a lot more success. They're a US based company. They have a lot more things going for it, but Alibaba has hovered, and I've kind of gone into this in previous videos, hovered around a 30 PE ratio, kind of in that range of 25 to 35. And for it to be at a 9.86 right now, just to me kind of confirms how undervalued Alibaba as a company is right now in the market. So now let's jump quickly into their earnings and what they reported. So they reported adjusted earnings of $1.55 on revenue of 32.2 billion. Analysts though had expected them to have an EPS of $1.07 and a revenue of 29.9 billion. So obviously really good beats there. They beat by almost 50 cents on their EPS, and then beat by just around 2 billion on their revenue. So that is huge. After the move, they were able to climb, the stock climbed 14.8% to close at $94.48, and the revenue overall climbed 9% from a year ago. So, and a lot of that coming from their commerce business, which is very interesting because they haven't had a ton of they've had a ton of innovation in other industries, whether it's the cloud business and branching out, again, similar to how Amazon has. So it's interesting that their core business, their core commerce business, is still kind of experiencing a lot of growth. A lot of companies, that'll kind of fall off, and that'll be their stable backbone. And then they'll expand to other businesses, especially like the cloud space with Amazon and other things like that. And that'll be their new kind of growth vectors. But they're still experiencing, what is relatively decent revenue growth from their core commerce business. So that is huge. So with that, Alibaba has been beaten down severely over the last 6 months, year and a half. Really, what we're seeing, and that's kind of goes back to the chart that I was talking about, where they're down like 60% since October of 2020. So what's interesting is, right, they're still beating earnings, they're still moving in a positive direction. So the question is, right, where does that weakness come from? And again, we've talked about this a little bit in previous videos, but strict regulatory environment. So what they're talking about there is, right, the potential of delisting the stock because it was a Chinese stock and it hasn't up until recently, there's been concerns of whether China would actually require their companies to meet US standards. But recently, China has basically announced that they want to work with the US government and be able to ensure that companies are meeting those standards to be able to be listed basically the New York Stock Exchange and other US exchanges. So economic weakness, that's everything. Everybody knows what's going on there. They've had continued shutdowns with the virus. So China has been one of the countries that's kind of been lagging behind the rest of the world, where they are still shutting down cities, like over huge cities. You know, they have millions and millions of people in their in just a single city, and they're shutting it down. And that's not only disrupting basically the Chinese economy, but it's also disrupting supply chains and US based economies. So it's kind of interesting that China has continued to take that approach. I'm guessing it comes from them getting a lot of heat originally when the virus kind of was released, and they're trying to basically mitigate anything that might happen and might, lead to more issues or regulations against China. So I'm guessing that's kind of the stance that they're taking. In my opinion, they could probably loosen up just a little bit and help the overall economy of the world by, releasing and pulling back on some of these restrictions. Supply chain issues kind of goes along with the same thing. Inflation, again, everyone kind of knows what's going on there. So my point in kind of stating all those issues going on is a lot of these are very short-term issues. Strict regulations, eventually something's going to have to get figured out. You could bet on that. Either, China's going to completely crack down and stop companies from being listed in the US, which they've said everything to the contrary of that. Economic weakness, eventually that's going to recover. These shutdowns, eventually I think those are going to go away. Supply chain issues, same thing. These are kind of temporary issues that people are looking at. But overall, the company itself is clearly still doing well. So that is huge. And this next portion that I've highlighted here. So Baba recently announced that they would increase their buyback program to 25 billion from 15 billion. So that's in addition, they've already bought back 56.2 million shares for about $9.2 billion. So that is huge. And that's something we've seen with Apple. So when they buy back shares, basically what they're doing is, right, removing shares from the market, and overall their earnings per share, right, will go up because there will be less shares outstanding on the market. So that's huge because the company, it just basically inflates the EPS. And again, we've seen Apple as well as many other US based companies do similar things to basically bolster their stock returns for their investors. The companies want their stock prices to go up. It just only, because a lot of the employees, whether it's the CEO or even, someone down in the line, a lot of them own shares of the company and they overall want the stock price to increase. So buybacks are huge, and they're a great way of doing it that we've kind of seen, throughout the market. Especially recently with a lot of the weakness in the market. The last thing I wanted to touch on here is the price target. So it's very interesting, and these price targets seem extremely low to me. So this right now, we're just going to take a look at this average. So there are 41 analysts covering this. There's not 41. There's 41 saying that Alibaba is a buy, 7 saying it's overweight, 6 saying it's a hold, 1 saying underweight, and surprisingly, actually 0 saying sell. I'm kind of surprised by that number. It's almost very interesting that this is kind of flipped around, because if you looked at this 6 months ago, there were quite a few people, analysts, saying that you should sell Alibaba. And obviously this was when all the news was coming out that it could be delisted, other things like that. Everything going on. But I'm kind of surprised with all these, people up here saying buy, that this price target isn't higher. So this right now is 1,008 yen. Chinese yen. And basically when we convert that over, that 1,008 only converts to $151. So in my opinion, that's extremely low. Like we said, the forward PE ratio is around a 9 right now. And if it tripled up to a 30, which again, I personally do not think is unreasonable at all with all the growth that Baba has, the stock price would basically triple as well. And you could see this triple up to a $300 stock. So in my opinion, I would easily put a very conservative number of like 175 to 200 for my personal price target. I think it could easily get up there within a year. 150, I think is, should definitely happen. I don't really foresee an environment unless a recession, comes about and things continue to get worse and worse. Then maybe 150 or not reaching 150 is possible. But with how things are kind of slightly starting to turn around, I think it's definitely easily achievable to get 150, if not 175 to 200. So that's just my opinion on the stock. Overall, obviously, do your own research. Like I said, I am an owner of Alibaba stock. I do not plan on doing anything with it until probably it gets over, like, I'm thinking over 250. I'd love to sell out, around 250 to 300, depending on how things, go. If the company obviously has a lot more growth at that time, then I'm gonna keep holding. There's no point in selling out if you see a lot of growth for the company. But overall, that's kind of, again, my opinion on the stock. Make your own decisions. As always, if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And have a wonderful rest of your day.